Good morning and welcome to our webinar series on tax issues in Ghana. And many businesses have suffered penalties and other sanctions as a result of findings from tax audits by GRA. The big question is, must all GRA audits end up in the payment of penalties, interest and surcharges by a taxpayer? Well, we are here today to have a discussion on how to, navigate tax audit with specific focus on withholding tax audits. So with me today to have this discussion, I have a lady and a gentleman from our tax unit. So I would want them to introduce themselves. Then we set the ground rules. So I have Esla and Emmanuel. So I'll start with the lady first. So Esla, please introduce yourself.
Yeah, thank you, Amos. Hi, everyone. I'm Esla Odame. I'm a senior tax associate with over 4 years experience in the tax unit of SCG. And I've been involved in a variety of tax assignments covering tax audits, tax due diligence work, general tax advisory, corporate income tax, and other tax compliance work here.
Okay, thank you, Esla. So Emmanuel, can you take over and introduce yourself?
Good morning, everyone. My name is Emmanuel Ado. I'm also a senior tax associate at SCG with over 5 years experience in tax practice, which include 4 years experience with PwC tax line of service. I've also been involved in several tax engagements, which include tax audits, tax advisory services, transfer pricing, corporate tax, and indirect tax services.
Okay, thank you very much, ladies and gentlemen. So our objective for today's webinar is to help educate the public, especially companies, about withholding taxes, and to discuss some of the common issues that arise from withholding tax audit by GRA, and also share some tips on how to stay withholding tax compliant as a taxpayer and also prepare for GRA withholding tax audit. The last time we came your way, we discussed navigating VAT tax audits, and then today we are focusing on withholding tax audit. But before then, kindly note that your mics are muted to prevent any feedbacks from participants. And then if you have any questions, we encourage you to type them in the Q&A box below. And then at the end of the presentation, all questions would be attended to. So take note of that. So now let's move into the discussion. All right, so ladies first, so I'll start with Esla. So Esla, when we say withholding tax, what is it all about?
Okay, thank you for the question, Amos. Withholding tax is basically an amount of tax that is withheld by a party making payments to another person. Okay, and I'll give a simple example. For instance, if a customer purchases goods or a service from a vendor, okay, the tax implication is that the customer becomes the withholding tax agent, and then the vendor becomes the withholdee. So here, the withholding tax agent, which is the customer, is required to withhold an amount of tax when making payments to the vendor, who is the withholdee. And the provisions of the Income Tax Act 2015 Act 896 actually specifies and requires that a resident person who pays an amount for works or the supply of goods and service to another resident or non-resident person with a source in Ghana, he is required to withhold tax from the payment at a rate specified under the paragraph 8 of the Fair Schedule, and we'll get in further on the rates later on. So this withholding tax agent is required to pay the taxes withheld to the Commercial Journal within 15 days after the end of the month and submits a withholding tax credits to the supplier or the vendor. And withholding taxes are effectively, they are a prepayment of an annual corporate tax by the vendor from whom it's withheld. And they are required to, they can use this withholding tax credit certificate to offset their tax liability at the end of the year, their corporate income tax. That's if these payments are on account. Yes. And anytime, so the withholding tax agent is required to actually give the tax credit certificates to the vendors. They are supposed to follow up from the GRA and then submit this withholding tax certificates back to the vendors for them to be able to use it at the end of the year. Yeah, so generally this is all that withholding tax is basically all about. Yes.
So generally it means that when you pay up or when a tax is withheld, it's like you have paid in advance your tax, so you have the opportunity to offset it in future filings.
Yes, if it's on account, if it's
right.
Payment on account. Yes.
Okay, so now let's move to Emmanuel. Emmanuel, ESLA has summarized or given us what withholding tax is all about. But then let's now look at what is the scope of withholding tax. That is, what does it cover? What sort of things does withholding tax cover generally?
Okay, withholding tax covers a lot of transactions or payments. One has to do with the supply of goods. What I mean is when a vendor supplies you with raw materials, products, equipment, objects in liquid or gaseous states, all those forms parts of goods. And then the withholding tax that applies when you're making payments, when a vendor supplies you with good, is 3%. For the supply, then we have a supply of works. So when someone performs works for you, a company performs works for you by way of construction or reconstruction, something like demolition, repairs and maintenance, installation, they are all parts of works. And in such cases, you should withhold 5%. Okay. Another scope has to do with service. Okay. When you receive service from resident persons by way of professional services or consulting services, or let's say technical services, when you are making payments, there's withholding tax applicable, and the rate is 7.5%. But for individuals, such as directors, that's 20%. Again, withholding tax also covers payments that we make to non-resident persons.
Okay, so we have payment to residents and then non-residents.
Yes.
Okay.
For non-resident persons, it could be also for the supply of service or for the supply of works. And those payments, generally, when you are paying, you should withhold 20%, except there's a double tax agreement to cover that transaction. Okay, in which case there will be a lower tax rate. I think we will get there. And then again, payment for investment returns. Okay, so when you're making payments, i.e. such as dividends, rent, and interest, except when those payments are exempted, you have to withhold tax on those things. And again, on branch profit tax, when you're making payment for branch profit tax, let's say a non-resident person carries on a business in Ghana through, let's say, a permanent establishment, and they have earned a repatriated profit. When those profits are being paid, you have to withhold, and that's called the branch profit tax. That one, it's a final tax of 8%. We also have withholding that comes in transaction in our petroleum sector and also in our mining sector. So those areas are the areas that withholding tax comes to play. So those are the scopes that I have mentioned.
Okay, that's very interesting. So I'm interested in the investment part. So assuming you invest in a company and you are being paid a dividend, the money you receive is actually less withholding tax. Is that the case?
But there's a threshold.
Okay.
To that. Yes, but if you if you own more than, let's say, 25% shares in that, you would be exempted. But if it's less, then the withholding tax will come in.
Okay. All right. So so now I'll come back to Esla, and Esla, you know, now we know the scope. So what and since we are focusing on the audits, what are some of the key issues that are raised by GRA during such audits, or specifically during withholding tax audit? What are some of the key issues that come up, and what are the likely implications of such issues?
Okay, thank you, Amos. So as we said earlier, withholding tax is one of the common areas that normally pops up during audits. And some of the issues that comes up in respect of withholding tax, the first one I would talk about is failure to withhold on payments made to third parties. So with this one, this is actually the general rule of the withholding tax laws, that some companies are not aware at all of the withholding tax laws, and therefore they do not withhold on all payments. This is also common with related parties who transact business amongst themselves. So we find out that resident companies fail to withhold taxes when they transact business with their parent companies. This is normally because of the net off that they actually do. So they net off their expenses against their income when they are dealing with the same parents company.
So that when they are in the same group.
Yes. So
Okay.
they are in the same group, because of the net of that goes on, they sometimes ignore the tax implication, especially on withholding taxes. And this is actually a common issue that normally arises during tax audits. And taxpayers and companies need to be very aware of that. And the law requires individuals or persons, individuals, if you are in an investment business or any other business, and also persons, companies, they are required to withhold tax on the gross amount of payments where the amount of the contract exceeds 2,000 Ghana cedis annually. So when you make payments, when you purchase goods or service and the amount exceeds 2,000 Ghana cedis, you are required to withhold. Or if at the end of the year, so if you've been in constant maybe purchase with a particular supplier or vendor, and at the end of the year it adds up to the 2,000, you're supposed to withhold on every transaction that you deal with this supplier. Okay, because at the end of the year it will definitely exceed the threshold of 2,000.
So you need to estimate that it
Exactly.
will go beyond the threshold of 2,000, and then you start applying the withholding tax, or you need to wait till it reaches 2,000 before you apply the withholding tax.
Yes. So
which one comes first?
So you need to, so if you've engaged a supplier to be supplying you with a number of goods or maybe a service at the end of every month, okay, and this gross amount involved will actually, in the aggregate sum will exceed the 2,000 at the end of the year, then you have to make sure that you withhold on every transaction, on every invoice. Yes.
Okay.
Yes, and I would like to also state that this threshold does not apply to investment returns that Yima mentioned earlier on. So for that one, irrespective of the threshold, for dividends, rents, irrespective of the threshold, you need to withhold. Okay, unless you are into lottery winnings, that also has its own threshold. We'll go to that one later on. And so, I also want to state that failure to withhold taxes, when companies fail to withhold these taxes, it triggers interest of 125% of the statutory rates, which is compounded monthly, in addition to the amount outstanding. So if you fail to withhold, you pay both interest and then the amount outstanding as well. Sometimes the interest can even be more than the tax itself.
Wow, that's a lot. 125%.
Yes, of the statutory rates compounded monthly, which is applied to the actual tax liability that you are supposed to pay for the withholding tax. Yes.
That's a big disincentive to
Yes, if you are not compliant.
Yeah.
Yes. Another common issue is application of wrong rates. especially payments to non-residents. So the law says that when a person makes a payment to a non-resident person, okay, in respect of, could be insurance premium, management or technical service fees, supply of or use of goods, works, service, where the contract give rise to income in the country, you are required to, for non-residents, you are required to withhold a withholding tax at a rate of 20%. And as Ima stated earlier, subject to a double tax agreement. When we say a double tax agreement, we're actually talking about there are treaties between two or more countries to avoid any international double taxation of income and property. Okay, and then the main purpose for a DTA is actually to divide the right of taxation between two contracting countries to avoid any differences. And now the GRA is very key on companies applying the DTA article. Okay, so they make emphasis that a non-resident person who seeks to rely on an article in a double tax agreement shall submit a certificate of residence from the competent authority of that person, of that person's country of residence, to the Commissioner General. So before you apply the reduced rates based on the DTA, before you apply the article in the DTA, you need to have this certificate of residence from that supplier. You need to request for it. Because during an audit, when the GRA comes up and they realize that you've actually applied a lower rate, since you've actually transacted a business with a non-resident person who, for instance, let's say is in UK and has a DTA with Ghana, you've applied 10%, they'll ask one further for this certificate of residence to prove the rates that you've used. If you're not able to provide that, they'll reverse your 10% and actually use the right rate of 20%, the general rule of 20%. It's require you to pay.
The DTA is an interesting subject. Maybe that will be for another discussion. But then what we need to establish is that when you, a taxpayer, or it cannot just say, I qualify, to benefit from the DTA, unless they produce the certificate of residence. Mm-hmm. So you just don't take them by word of mouth and accept it. Exactly. If you did that, you will suffer as an agent. Is that correct?
Exactly.
Okay.
You end up paying more taxes. Okay. So, and then another issue is no evidence of withholding tax exemption letters from suppliers. So sometimes some of the issues that come up in relation to withholding tax exemptions, especially sometimes companies who deal with their suppliers, they get feedback from their suppliers that, so we have an exemption from withholding tax, so do not withhold. But you shouldn't just take it for word of mouth that they are exempted. You need to request for an approved withholding tax exemption letter from the GRA from these suppliers. When you apply for an exemption and you are being granted, there are a whole lot of conditions that you need to go through before you are being granted. So if you are granted an exemption, you should have a certificate to show for that, a letter, a withholding tax exemption letter to show for that. And companies should bear in mind that this exemption letter has an expiring date. The Commissioner General gives for a period. It could be 3 months, it could be 6 months, depending on the Commissioner's decision. Okay, so you need to monitor the period in which this exemption letter covers. Okay. So that when you are transacting business with this supplier and they provide you with this letter, you need to check whether it's still valid, so that you don't, before you decide to withhold or not to withhold. But normally during audits, companies are not able to provide these letters and they end up paying taxes on whatever payments that they've made, whatever expenses that they've incurred with these vendors.
Okay, so it means that for the exemption letters, there's nothing like one-time open-ended letter of exemption by the Commissioner General, but each letter has a specific duration.
Exactly.
That you need to. So you as an agent, you should be able to establish whether the period within which you are, the supplier or whoever is, presenting you with those things are valid.
Exactly.
So it's your responsibility.
Yes.
Okay.
Yes. So you need to always check that, because if you don't check that and you keep that on record and use that as evidence,
You will suffer.
You will suffer. Yes. And then lastly, I'll talk about late filing of withholding tax returns.
Okay.
This is also another common issue we find during audits. The law states that the tax withheld shall be remitted to the Commissioner General within 15 days after the end of the calendar month in which the tax was withheld. And anyone who fails to submit on the due date is liable to a penalty of 500 Ghana cedis plus 10 cedis each day. So if you don't file on time, you should bear in mind that you're going to pay a penalty of 500 plus 10 cedis each day this return remains outstanding. So if you're supposed to file your returns, let's say by 15th of October, and as at that time you've not filed, and we are in November, you compute, they'll first slab the
500
cedis, and then compute 10 cedis times the number of days that this return, that will be from the 16th of October.
Okay.
So now.
So if you fail to file on the 15th,
Yes.
alone, that is 500.
Exactly.
Then from the 16th, 10 cedis is added. So on the 16th, you are liable to 510.
Exactly.
And it adds on till you settle or file your returns.
Yes. Yes. And I also want to add that filing of returns, this is actually one common area that a lot of people don't know. That even if for a particular month you don't have any taxes to pay, you still need to file a no return. The practice notes for 896 states specifically that you need to file a no return even when you don't have any tax to pay. So you should still file a no return, get your filed copy and keep it on file, because you should bear in mind that maybe now that maybe you've had some experiences in the past with the GRA auditors and it didn't come up. But as time goes on, the GRA, the government, they are very key on compliance, they are trying to find all means to ensure that companies are compliant to every law. So we really need to be on track and make sure that you are compliant with almost every law. Yeah. So these are the common issues that's
very interesting. The last point you raised, that when you don't even have any tax to pay at the end of the period, or your monthly withholding tax filing due date, the law or the practice notes require you to file a nil return.
Yes.
Which means that you still have to file, but you don't have to pay anything.
Yes.
If you fail to file, then 500. Is that correct?
Exactly.
Okay.
Exactly. So they're going to slap the penalties on it for you to pay.
Okay, that's interesting.
Because the Revenue Administration Act gives a general rule that you should file a nil return even when you don't have any tax to pay. And the practice notes for the withholding tax actually states specifically that yes, for withholding tax as well, you need to file a nil return. So I think that should be noted. So these are the common issues that normally comes up for audits. Yeah.
Okay. Thank you, Esla. I would like you to take a breather, and then I move on to Emmanuel now. But then before I go to Emmanuel, I would like to remind our participants that if you have any question, you can post them in the Q&A box below your screen, and then we would attend to those questions at the end of the session. So Emmanuel, now I think Esla has highlighted on the some of the challenges, that taxpayers face. Now, let me find out from you. Well, apart from those key issues that come up, what are the specific challenges that are faced by taxpayers, you know, in most of these cases of audits?
All right. Thank you, Amos. We've noted that these issues that have been identified at times come from the challenges that taxpayers face when they want to be compliant with the withholding tax laws. There are some peculiar challenges with the withholding tax. One that we've identified has to do with purchases that are made on the open market. What do I mean by this? Sometimes companies goes out on the open and make some purchases, okay, and then they book them in their books, okay. And then we've seen that there are challenges when it comes to withholding tax or applying withholding tax on such purchases. And companies are not able to do that because, well, the supplier will not agree that they should suffer the withholding tax, and that becomes a real challenge. And in such cases, at times it's good that taxpayers maintain supporting documents to explain to the auditors when these kind of issues come up. So that's one. Second, I would say that some suppliers may be aware or may not even be aware of these withholding taxes and may demand that you increase the prices of their goods. So what happens is that the supplier doesn't want to bear the withholding tax. So I have supplied you goods to the tune of 10,000. Okay, the withholding tax law says that I should withhold 3%. Me, the customer, okay. They'll say that no, we want our 10,000. Okay, so you gross up, I'll gross up the price so that you will suffer the 3% withholding tax. And it becomes an additional expense to you. It becomes an additional expense to you. Once the GRA picks these expense lines, okay, they are not going to regard you bearing the 3% tax because it is rather the withholdee who should suffer, not you, the agent. Okay, and it's a challenge in most cases, and this normally comes on in cross-border transactions. You really see this kind of issues coming up, and I would say that once companies make this kind of payment or they bear this kind of taxes and records it in their books, when there's any income tax computation, we will disallow these taxes because they are not deductible expenses, and so they also have to pay tax again on that expense for corporate tax purpose.
Okay.
Okay. And again, the GRA has a general approach in calculating your withholding taxes, your exposure. Let me put it that way, the exposure in terms of withholding taxes. What they do is that they pick the expense items in your books or in your trial balance, okay, and then they will apply the rates to each of the expense lines and come to a determination that this is your withholding tax amount payable. Okay, let's see what you have paid. We will compare. Okay, there's a difference. Come and pay. They slap the interest on it, and then you are required to go and pay. What we've noted from this approach is that there are times that there are some expenses that are exempted from withholding taxes.
Yeah.
Esla mentioned that some suppliers may be exempted from withholding tax. Okay, so when you get their working papers, what you have to do is to review and find out whether those exempted payments or suppliers who had withholding tax exemption, have the GRA slapped a rate on it? Are they charging the rates on it? Because since they are exempted, and as Esla said, you have to keep the document, the exemption letters, there shouldn't be any withholding tax applicable on it in their calculation. I would also say that, again, there are certain expenses that we pay to government authorities, such as renewing of permits, okay, or license, and those kind of expenses you can't withhold, okay, but they are booked in your books. And looking at the approach that the GRA takes, you will see that those expenses will be within their workings, okay, which shouldn't be. And companies need to really review these workings when the GRA comes for an audit to make sure that all those items have been taken out and then the right withholding tax position has been established. Okay. And again, the what we see in audits is, again, surcharge or withholding tax on reimbursement or recoverables. In most cases, you see that in the expenses, there are recoverables or reimbursements. And when we are paying, most companies don't withhold tax on recoverables. Okay, when you fail to do that, you should be able to show that, well, these are indeed recoverables and hence have been exempted from withholding tax. I would also say that there are times that some expenses are included in the workings that do not amount to the threshold of 2,000, as Esla mentioned, which have been subject to withholding tax. This also has to be reviewed and make sure that expenses that doesn't reach the threshold, except they are individuals or from investment returns, are not surcharged, so that you don't suffer the withholding tax again. So in all, these are the challenges that we've noted when these issues come up in tax audits.
Okay, so very soon, I think, I mean, to help companies to stay compliant, certainly, you might have identified some good practices that maybe when companies practice, it's likely they will stay compliant and then avoid some of these penalties that could come up when the audits are conducted. So I will start with Esla.
Yeah.
So Esla, can you share some of the good practices that companies can adopt to stay withholding tax compliant?
Yeah, so the first one I'll talk about is filing of returns on time. So you need to make sure that you file your returns on or before. The law says that on or before 15th. So you shouldn't wait for last minute. You shouldn't wait for the 15th before you rush to file your returns. You can always keep your records, make sure that you have everything intact to file even before the due date. And then also you need to keep proper records of all your filed returns, all your exemption letters received, all the supporting documents that you need to have. You need to make sure that you have all of them intact, so that in case of any audits, you can always produce them. And then also, you need to perform.
So as one of my bosses would say, the name of the game is evidence.
Exactly.
So whatever you do, you must have evidence to back whatever you have done.
Yes.
So that you don't suffer.
Yes.
Okay.
Yes, especially on the exemptions.
Exemptions. Okay.
Exemption letters. Yes, you always need to have all the supporting documents. And then also, we always advise that you perform a monthly reconciliation. So you always need to compare your purchases ledger, your ledger account with your VAT, your withholding tax schedules, which you file at the end of every month. You have to make sure that whatever amounts that you have in your books, okay, at the end of the month, tallies in with what you are going to pay. If you're able to keep this monthly reconciliation, you'll be able to identify if you've not withheld on a particular transaction, okay, which you've kept in your books. It's better to do it that way than wait at the end of the year before you.
So monthly reconciliation
is very key.
Is key.
Yes, it really helps to identify all these issues. And then also, you also need to have a good knowledge about the applicable tax rates. Yeah, so you need to know the rates that you're supposed to apply on the various types of transactions. You can always consult your tax advisor if you are not so sure about what rates to use. If there are any unusual transaction that you are about to engage, you always need to consult your consultant if you are not so sure. Yes. And then also, you also need to follow up from the GRA for your withholding tax certificates, because sometimes the GRA delays anytime you make your withholding tax payments, you always need to follow up to get this withholding tax certificate for your suppliers. Because if you don't do that, getting to the end of the year, they'll be chasing you for it. Because especially if the payments are on account, they would want to actually obtain this certificate to reduce their year-end corporate tax liability. So these are basically the good practices that we all need to adhere to, yes, in terms of withholding tax compliance.
And also, I think you can, it's also important that if you are a taxpayer and you find challenges with all these issues, you consult your tax advisor, for the appropriate advice and then direction on how to, approach
Exactly.
such transactions.
Yeah.
So it's important that you have an advisor. Okay. All right. So I can see some questions coming in. I think we can be moving towards the question and answer session. So Emmanuel, I don't know if you wanted to add something to the good practices.
Yeah, I would say that anytime that there's a tax audit on withholding taxes, at times the GRM makes mistakes, okay, and companies should make sure that they really review their draft workings thoroughly, line by line. At times, it could be that they've even applied wrong rates. Okay, the rate should have been 3%, but they've applied 7.5%, okay, or 5%, and it will expose the company to a higher tax liability. Okay, so they should really review the workings line by line and make sure that those items that shouldn't suffer withholding tax at all are taken out. Those that they have slapped withholding tax on it, are the withholding tax correct? At times they don't even know that, well, this supplier is from, let's say, UK, and they have a DTA, so they will slap 20% instead of 10%. Okay, and so they should probably review those workings.
Okay. All right. So I have some questions coming in. So, ladies and gentlemen, you have to be ready. I'll go through the questions and you answer them for us. So the first question is from an anonymous attendee, no name. So he said, please, what is the position of the law on payments to government institutions like ECG, Ghana Water, etc.? I think you touched a bit on that, but can you answer that question? What is the position of the law on payments to government institutions like ECG, Ghana Water, and the rest, particularly utilities? I think that's what they are.
Okay, I know those payments are exempt from withholding taxes.
Okay.
Yeah.
So when you are making payments, you don't need to withhold on those one. Okay. All right. Delali. Well, okay, she said, very insightful information. Please, can the presentation be sent to us after the webinar is over? Thank you. Yes, Delali, the presentation will be posted on our YouTube channel, and you can access it via our website or directly to our YouTube channel, www.scg.com.gh. When you go there, we would upload it there so you can have access to it. Okay, Celestina Ejil. She wants to, okay, she asked a question. She said, would withholding tax apply in this scenario? Please, let's listen very carefully. It said a local company collects money or payment on behalf of a foreign entity, which is in Ghana. Which is in Ghana. Okay, let me take it again. A local company collects money or payment on behalf of a foreign entity or company. Operations, into bracket, operations of the foreign company is conducted outside the country. At the point of remitting the payment to the foreign entity, should the local company withhold? This sounds more like payment to non-residents. I don't know if I should take it again or you got the question.
Yeah, take it again.
It said a local company collects money or payment on behalf of foreign entity. Operations of the foreign company is conducted outside the country. I don't know which country in this case they are referring to, but at the point of remitting the payment to the foreign entity, should the local company withhold?
Okay, I would ask if the payment has a source in this country. Okay, is it a case that, okay, the one making the payment is in Ghana, so you are maybe the subsidiary and you've gone for the money and you are remitting it to the parent. The one making the initial payment, if the payment has a source, he's the one required to withhold tax. Okay, but you are just like an agent, just taking the money on behalf of the person and remitting it. In that case, withholding tax wouldn't come in
okay.
because it has already suffered from the initial payment where initially the transaction took place.
Okay, so Celestine, if the question has not been, addressed clearly, kindly send, a follow-up so that you can explain the scenario better for us to understand and help you. Okay, so another question. He said, in terms of audit approach, would you say that GRA is doing a good job? If not, what can be done to improve the audit process and approach? This is an interesting question. And I think for that one, to say GRA is doing a good job or not, it's quite subjective, and we would want to touch on that one. It's for the taxpayer to judge, but then I think generally they are doing their best, and we as taxpayers too must do our best to be compliant so that we don't fall foul of the law at any point in time. So it's important that we address that. So we as taxpayers must be ready and be compliant, and then cooperate with the GRA and base everything on the law. I think that should be the approach. Yeah.
Yeah, I also wanted to add that you always need to have your records ready and intact. Because if you have all your records complete, sometimes the audit doesn't even take more than 2 weeks and even makes the work of the GRA easy. Okay, so yes, as Amos said, it's subjective. Depending on the team, on the job, you can't really say that they are doing a good job or not, but you also need to do your part by being compliant. Yeah.
Yeah. So Francis Kofi wants to find out, he said, please, can I file withholding tax and pay later any day? Can I file withholding tax? So say on the 15th, filing is due. You don't have the money to make payments. You go and file to avoid the 500 non-filing fee or penalty. Then later on, you issue the check to cover that. Is it? That's what Francis Kofi wants to find out. Is it possible?
I think there's a penalty for late filing, and then there's a penalty for late payment. There are two things. Normally, once you are filing the return, it should go out along with your check or the money. Okay, you can't file and then later go and pay. You may not suffer penalty for late filing, but you suffer penalty for late payment.
Okay. Okay.
Yeah, so I would want to add that if you've withheld, because if you've withheld, then the amount should be, you should have the money available to pay. But if that is not the case, then you would file a new return to be on the safer side for that month, and then make sure that you're able to get this payment that you need to make at the end of the next month, and then make the necessary payments. Yeah.
Okay, I have 3 more questions, and then if there are no more questions, then we would wrap up, and then would end the session. So somebody wants to know, you touch on the rent, withholding tax on rent payments. Wants to find out, so does it mean that as individuals, when we are paying rent to our landlords or anybody, to our landlords, we should withhold, or it's for only companies?
Okay, so withholding tax on rent takes different forms. Okay, so if you're an individual, individuals are not required to withhold unless you are in the business of rental. Okay, so if you're an individual and you're conducting a business, okay, then you are required to withhold on those rental payments that you are making payments to either a company who is also into rental or anything. But if not, if you are just using that rent for your own residential purpose, you are not supposed to withhold.
Okay, so in effect, individuals are not required to withhold when paying rent. Yes. Okay. So another person, this one no name, he said, please, do we withhold when dealing with a free zone company? When you are dealing with a free zone company, are you required to withhold, or they are exempted upfront?
I know free zones, their income are exempted, so we don't withhold.
Okay, so we have the backing of the law that you don't withhold on.
Yeah.
Okay. Okay, Richard Adu wants to know, can you please touch on the withholding tax VATs? I think this is, would you want to touch on it? Or I think this is a subject on its own that we probably would have to address in future. But maybe you can just give a tip on it.
Yes, the withholding VAT is not for everyone. Okay, they are selected agents that the Commissioner General has picked as agents to do that withholding for them. So they are selected companies. Instead of waiting at the end of the month for you to pay the VAT, they are required not to pay all the VAT, but rather withhold on the portion of the VAT that would have ordinarily been remitted at the end of the month and pay it earlier on the 15th of the month. Okay, so it's not applicable to everyone unless you are selected by the commissioner. You can't do that, and you are required to withhold on the portion of the VAT, that's 7% of the VAT, and then remit it to the GRA on 15th of the following month.
Okay, so now let's take our last question, and then we will wrap up. There are few questions, but I'm not sure we'll be able to attend to all of them. So from Yawiafe Akenten said, thank you very much for the insight. My question is, assuming I engage somebody to provide services for me, I know the threshold for withholding is 2,000 Ghana cedis, but I have been engaging the person for several times, but the amount I paid to the person at a particular time is below the 2,000, but on aggregate, it's more than 2,000 at the end of the year. So will I be liable or be surcharged when GRA comes for a tax audit?
Yes, so as we mentioned earlier on, the threshold is 2,000 annually, okay, and the aggregate sum. So if you've engaged this particular supplier on several locations, and at the end of the year, this the total amount will actually exceed 2,000. You are supposed to withhold on every transaction. You should bear in mind that when the GRA comes up, this total amount for the whole year is what they find in your books, and they are going to slap withholding tax on the total amount. Okay, because the total amount will obviously be more than even 2,000. So you need to withhold on every transaction if the aggregate sum will add up to 2,000. Yes.
Okay, so thank you very much, all the participants, for asking your various questions. For the question that we couldn't answer, we will try and address them later on through writing, and then you can also visit our website www.scg.com.gh for we have a lot of resources there which addresses some of the questions you have raised here. So to wrap it up, Esla, would you give your concluding remarks, and afterwards, Emmanuel, just a minute.
Yes, okay. So I would want to say that withholding tax audits, it's a common area that comes up anytime during an audit. There are lots of companies who face these penalties and interest on withholding taxes. And if you are unsure, as I stated earlier, if you are unsure about an applicable rate, what to do at a point in time when you are dealing with any supplier in terms of any unusual transaction, you should always consult your tax advisors. And SCG, we are always available to help you out with whatever transaction you are dealing with, be able to provide you with the appropriate withholding tax rate and all that you need in order to be compliant. Yeah, thank you.
Okay, Emmanuel.
Okay, I would also want to stress on the monthly reconciliation. It's really good. It helps you to know where the cracks are, where you are falling before the end of the year or before there's any tax audit. So I'll encourage companies to do the monthly reconciliation between the purchase ledger and then the withholding tax filings that they do, and also stay abreast with the tax rates. Okay, so that's a little that I want to add.
Okay, so thank you very much for that insightful discussion, and to our audience, thank you for joining us today, and we appreciate your time. And as I indicated earlier, you can always send us an email or visit our website. You can send us email to our email at info@scg.com.gh or visit our website. We have several resources there that addresses most of the questions that you have even raised here. So we hope to see you join us in our subsequent webinars where we'll be sharing with you, issues or discussing topics that affect your business. So we thank you very much for joining us today and have a great day. Bye-bye.